everything else going on in the economy, politically speaking, what will happen to the housing market?
Buyers like the Enov family, prices have been prohibitively high, up 29% since early 2020.
In this video, we're going to talk about the current housing market situation. We'll address economists' prediction for 2025. We're going to talk about the federal rate adjustment and how it could potentially impact the economy, and then also we're going to look at what both Harris and Trump have to say in terms of the housing market and how they will help the situation with unaffordability right now. So I pulled up the S&P CoreLogic Case-Shiller U.S. National Home Price Index just to kind of see where prices are at right now. So right now they're at all-time high. This is as of June 2024. So prices haven't come down. This is on a national basis, right? So it's not per state or per town you live in. This is just nationally overall. And I can't stress enough that you must look at the information locally as well, especially if you're getting ready to buy or sell. Per the National Association of Realtors, key highlights in this was issued August 22nd. The median existing home sales price elevated 4.2% from July 2023. So it's up to $422,000. The median price right now in the US is really close to $500,000 for just an average home. I mean, that is crazy, especially when considering where these home prices were just 4 or 5 years ago. What are major economists predicting in terms of home prices? Though I do want to caution you that home prices are just one part of the equation, especially if you're somebody that's going to be mortgaging. You're also going to want to pay attention to the mortgage interest rate. Now, if you're a cash buyer, then of course you're going to be wanting to focus much more on the prices of homes and where they're expected to be next year. So for that, I've actually done a roundup of the predictions from major economists, and I've plugged it into this PowerPoint presentation, which I'm going to share right now. So starting with Goldman Sachs, and this is as of September, they're predicting that home prices are going to increase by about 4% next year. Freddie Mac's latest prediction that I could find is 0.6%. Moody's Analytics, 0.3%. Fannie Mae, up by 3%. Morgan Stanley, 3%. Wells Fargo, 4.3%. Mortgage Bankers Association, 3%. Zelman and Associations, 2.3%, with an average of 2.6% estimated appreciation for 2025. The key takeaway is that none of these major economists are predicting home prices to fall next year. Okay, I think that's very clear from the chart that I just presented. Let's talk about the Fed and the fact that they dropped the federal rate by 50 basis points for the very first time since the beginning of 2022. As a matter of fact, in the beginning of 2022, they started to increase the federal rate. Up until now, 11 times in 17 months. Why has the Fed initially increased the federal rate, and why is it dropping right now? Well, it comes down to quantitative easing and tightening. When we got into the COVID years, we went into a lockdown, people lost their jobs, the economy basically came to a complete halt. And that really just put everything into turmoil. So what the Fed did is, first off, they've announced a quantitative easing approach in order to jumpstart the economy again. So what did the Fed do amongst a lot of things? The Fed lowered the Fed rate, which made it much easier to borrow money. And that also trickled into the mortgage interest rate, which really came down to a historical low. The Fed also purchased massive amounts of debt securities. This led to a lot of money floating in the market, which led to people purchasing homes, other products, services. And so we saw inflation just going up, up, and up. And in the simplest of words, when we talk about demand pull inflation, what it essentially means is that there's too much demand for a particular product or service. And that's exactly what happened in the housing market. There was not enough supply, but so many people were coming in wanting to purchase homes. And then we know what happened. Prices just escalated at a rate way beyond what was considered to be normal, which typically is year over year by about 4 to 5%. With inflation at an all-time high, the Fed then reversed their strategy. So instead of quantitative easing, they went with quantitative tightening, making it much more expensive to borrow money, taking away the money that was circulating in the market in order to put pressure on demand. And so the Fed kept increasing the Fed rate, like I said, 11 times over 17 months. And slowly the inflation numbers came down to the point where now they're approximately at 2.5%? We're at the peak. It was at over 9% inflation. Some news articles are questioning why the rate cut was so drastic and why it's coming now. And they're hinting at the possibility that we may be heading into a recession and that the economy isn't as good as the Fed is making it seem. Now, this is what Jerome Powell had to say. He called it, first of all, a calibration.
This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance.
So they're going to have future meetings on this, but it is very much expected that there's going to be another rate cut this year and possibly 4 to come next year.
I don't see anything in the economy right now that suggests that the likelihood of a downturn is elevated. Okay, I don't see that. You see growth at a solid rate. You see inflation coming down, and you see a labor market that's still at very solid levels.
Based on what he's saying is that he doesn't think that we're headed into a recession. It is very likely that the Fed has done a really good job at helping us move into a soft landing of some sort if it should happen next year or in 2026. If you're to believe what Jerome Powell is saying, how he's spinning the story, and what we're seeing data-wise being presented by the Fed. So the stock market is rallying with the news of the rate cut. Okay, so as of the 19th, the S&P 500 is up by 1.71%. So investors are pretty bullish right now when it comes to the stock market. Well, what if we do go into a recession? I mean, that's on a lot of people's minds, and a lot of articles are written about that. So let's actually talk about what a recession is, just based on the definition of it. We're going to refer to the International Monetary Fund. Their definition is: most commentators and analysts use as a practical definition of a recession 2 consecutive quarters of decline. So it has to go down for 2 quarters in the negative in a country's real inflation-adjusted gross domestic product, also known as the GDP, the value of all goods and services a country produces. Well, then next is, how has the GDP done over time? Here's the real gross domestic product based on Fed's economic data. And you can see over the last few quarters, it's just gone up. So it's not been in the negative. As a matter of fact, when we look at the trading economics chart over here, it's been up. We had a recession, right, during the COVID years. We're slightly down in these 2 quarters here, but not significant enough to call a recession. Small periods of decline, just what you've seen in that chart from 2022, doesn't necessarily hint towards a recession. There are other measures of activity that go into it to determining whether we're headed into a recession if the economy is truly slowing down to where a recession is being called. And so there's no official definition of a recession, but there is a group called the National Bureau of Economic Research, the NBER, that calls a recession. The likelihood of us going into recession by the end of this year is not very likely, and it may not be likely in 2025. We'll have to see what happens during the election, after the election, and how the economy responds. But when we talk about a recession and how housing prices typically evolve during a recession. I think it makes common sense to think that if we're in a recession, the more drastic, the more likely it is that the home prices are going to go down, they're going to crash. And that's not necessarily true. So what I want to show you is this chart, and it's from Keeping Current Matters. They're pulling information from CoreLogic and The Balance. And what they've essentially done in this chart here is they've looked at 6 different recessions, the last 6 recessions, and how prices have done. And really just 2 out of the last 6 prices have come down, with the most drastic one in 2008. 1991 was actually just down by -2%. There may have been a lot of reasons why that is. Mortgage interest rates typically come down, enabling more buyers to afford a home, even if we're in a recession. Point being is, moving into a recession doesn't necessarily mean that prices will go down. And as you've seen looking at the chart, in some cases, they actually go up. Well, now let's talk about the presidency and the 2 candidates and what they're planning to do in terms of combating the issues that we're feeling with the housing market, which is the unaffordability of purchasing a home. We just had a debate not too long ago, and I felt that Kamala's response to the housing market was just a little bit more detailed than Trump's. Okay, so by no means is this a discussion based on how I interpret the best candidate to be for the US. It has absolutely nothing to do with this. I'm going to be very critical based on their plans and how I feel about what they're proposing. Okay, and I think both candidates could go into way more detail, but this is what Kamala basically said. She talked about the construction of 3 million new housing units in the next 4 years for both rentals and sales. And she's also talking about a $25,000 down payment support for first-time homeowners. So I think the first part of her plan, getting more housing units in, is going to be great if that can be achieved in 4 years' time, because there is a supply issue. That's what's bringing up the prices. Prices are dictated by just one really simple economic rule, and that's the rule of supply and demand. If there's more supply for the demand out there, prices will come down. If there's more demand based on the supply, then prices will go up. Okay, so if you're adding more units to the housing market, 3 million in 4 years, that should help the pricing situation. That should bring prices down. But now she's proposing $25,000 in down payment support for first-time homeowners. And we know that the homes that are priced, say, $300,000 to $600,000, those homes are in massive short supply. Now you're giving the first-time homeowner $25,000, which should put additional pressure on a lack of supply that's already there. I'm not in favor of this one, but understandingly so. I don't know all the details around this plan. She's also talking about a historic expansion of the low-income housing tax credit and a first-ever tax incentive for home builders who build starter homes sold to first-time home buyers. I like that one. Now, what has Donald Trump proposed? During the debate, he didn't really touch on the housing market. So this information is from other discussions that he's had. Trump's housing policies are really around curbing illegal immigrants, which, okay, there's not a lot of evidence that they really are putting a lot of pressure on the housing market. Eliminating regulations on the construction of new homes. Not exactly clear which ones those regulations are, but that's what he's hinted towards. He's also talking about opening federal land for housing construction, and in his own words, he's saying that these zones will be ultra low tax and ultra low regulation. I think it's fair enough to say that from both candidates, we need to see more concrete information of how this is all going to work to really be able to judge it. I threw a lot of information at you, but what does this all mean? What do you do if you're looking to purchase or sell right now in the housing market? Look, I would say that it's very likely that home prices will not go down anytime soon. It's just not predicted to do so unless something horrific happens, politically speaking or economically speaking. Very likely that prices will continue to increase at a very slow rate. And so if you're looking to purchase, you're ready to do it now. As a matter of fact, we're now moving into the winter months. That's typically because of seasonality, when prices are going to be at their lowest. And then they start upticking again right around Q1, Q2. That's the peak selling season for the housing market. It's very, very seasonal. If you're ready to purchase, if you're looking to sell and you have to sell, look, I think a lot of it is just personal timing. It needs to make sense with your current situation, your lifestyle. If you have time to wait, whether you're buying or selling, then wait until after the election, because a lot more is going to make sense in the beginning of next year. I'm sure of it. I've given you a lot of points to think through. Thank you so much for watching today. I always appreciate when you guys do. And you can do me a favor if there's any feedback in terms of how you feel the real estate market is going to do in 2025. Leave a note in the comment section of this video. Thank you so much for tuning in again. I really appreciate it. Have a great day and take care.